All right, guys, welcome back to the channel. Very excited for today's video. I have three main topics I want to discuss: Ray Dalio, composer, and different permutations in the hedge funding strategy. So let's get started. I am 200 pages into Ray Dalio's just recently released book here. It's titled Principles for Dealing with the Changing World Order: Why Nations Succeed and Fail. And I've read Ray Dalio's other books. I have great admiration for Ray Dalio, not only for his prowess as an investor, um, but his erudition, his intellectualism, his deep reading of history, specifically economic history. You know what's interesting? In the beginning of this book, he thanks a couple figures. He thanks David Cannadine, Ian Bremmer, and Niall Ferguson. Now, I've read pretty much all of Niall Ferguson's books on economic history, his books on the Rothschilds. Ian Bremmer's historian. You'll see him a lot on Bloomberg. He's written a bunch of books as well. I haven't read his. I've read some of his essays, but not his books. And then he thanked also David Cannadine, who's a noted English historian. I finished his book last year. The Decline and Fall of the British Aristocracy. And Ray Dalio and I have this commonality of being interested in power changes, in cultural shifts. So you see that, for example, in Cannadine's book, how the British aristocracy ruled the world, and with their beautiful country homes, Chatsworth and such, and how that all dissipated. There's that line, 3 generations, shirt sleeve to shirt sleeve. So Ray Dalio is also very much interested in how someone or something, be a nation state, a class of people, go from very wealthy and powerful, and that shifts over a few generations. He's also, I believe, mentions Graham Allison. So Dalio is as much a historian, someone interested in ideas for its own sake, not just like a stock trader, someone buy this, sell this, or this, Pepsi is a better buy than Coke. He's a much deeper thinker than that. But let's get started. I want to read 2 passages that stuck out to me, specifically for how they relate to Composer, the software company that I've been using recently. So the first passage that jumped out at me and made me think of Composer is page 7. So he says here, from that learning came a visualization of an archetypical sequence of how rises and declines in wealth and power typically happen. The archetype helps me see the cause-effect relationships that drive how these cases typically progress. With that archetypical template specified, I can study deviations from it to try to explain them. Then I put these mental models into algorithms, both to monitor and conditions relative to my archetypes and to help me make decisions based on them. This process helps me refine my understanding of the cause-effect relationships to the point where I can create decision-making rules, i.e., principles for dealing with my realities, in the form of if-then statements, i.e., if X happens, then make Y bet. So that's exactly what Composer does. And it's something where, it's the only software that I know of that gives the retail investor this ability. Bridgewater is the multi-billion, obviously, maybe the hundreds of billions of assets. We can pull that up on Google, I'm sure. And so obviously they're going to have the resources. They're going to have hundreds of employees. They're going to have massive computer systems. But he says, if this, do that. And so, with Composer, you're able to build your own systems of trading that heretofore only places like D.E. Shaw, Rentec, Bridgewater, Two Sigma, these big hedge funds are going to have the ability to deploy. He says something similar again on page 17 that also jumped out at me. And let me pull that up here. So he says, the people and tools at Bridgewater were also invaluable to this research because the world is a complicated place, playing the highly competitive game of making sense of the past, processing what's going on in the present, and using that information to bet on the future requires hundreds of people and great computer power. So there you go. For example, we actively consume about 100 million data series that are run through our logic frameworks that systematically convert this information into trades in every market we can trade within every major country in the world. I believe that our ability to see and process information about all major countries and all major markets is unparalleled. It was through this machine that I could see and attempt to understand how the world I'm living in works, and I relied on it in doing this study. So there you go again. Hundreds of millions of data series. The computing power is literally out of this world. So Composer gives someone like myself, who one might define as high net worth retail, sophisticated retail, edge-seeking retail, seven-figure retail, however you want to describe it, meaning I'm not having employees, I'm not taking outside capital, but I spend many of my waking hours researching markets, reading books on investment economics, so on and so forth. So again, with Composer, and I'm going to now show just yesterday to give you a sense of what it's allowed me to do and the systems it's allowed me to build. So this is Composer here. Right now, I believe I have 76 symphonies running. A couple were built by Composer that they offered when you sign up, and then the rest I've built. And you can see these numbers changing. So you can see, look, this is changing second by second as markets are changing. There you go. See, 74. But let's go into Alpaca, which is where the systems of trading are synced into their API, and then it's executed through Alpaca. So we are going to go. So my cost basis is 152 for everything. And I've been slowly launching maybe 3, 4, 5 symphonies a day to get to that 76. So we're going to shrink my screen just a little. And we're going to go to activities. So you can see here, this is yesterday, 12/9, and you see at 3:04, these were executed, 3:04 in 10 seconds. Okay. Now, I didn't manually execute any of these trades. Now, I deployed some symphonies yesterday, so a lot of the buys are the cash going out and starting new symphonies that I chose to deploy. But I'm going to bring this to 50 rows here. Okay, so you can see all this yesterday. I'm just going to scroll down all the buys. There's a lot more buys yesterday. You can see this was 1,500. This was a 1,400, 56. There was a buy, a $3,900 buy of IEF. Still scrolling. Now, all of these happened manually. All of these happened from Composer connected to Alpaca. I didn't put it, not manually, excuse me. All these happen automatically, not manually. I didn't have to go in and sell this and buy this. It would have been impossible to execute 50 trades yesterday within the space of 2 seconds, because it's 3:04, 8 seconds, and it was completed by 3:04, 10 seconds. So within 2 seconds, 50 actions, if you want to call them that, instead of buy sells, but actions, movements within the account happened. There's nothing else like this, and no other software would have been able for me to be able to create these things and have them execute like this. So to me it's mind blowing. It's revolutionary with what's out there, and it allows me to incorporate some of these systems of trading, these quantitative strategies Whereas before it would have been, maybe I can run a couple of them. Maybe I can run 2 or 3, and I run to the computer at 3 o'clock or 3:50, and I put in my sells and I use the cash to do my buys. But then by the time I do that and the money clears, the market's changed, and so the amount that I should be buying is different now. And so the computer does all this for me. The computer does all this, so I don't have to think. And of course, the thinking is in the symphony creation, but not in the execution. The execution is done for me. So again, those 2 passages of Ray Dalio really just made me think of the power of Composer. And as you guys can see, I have 152,000 in here. And I was going to put in 200. I have some other stuff with my real estate holdings that I'm taking care of. So we'll see if I keep it at the 150 or I put in that extra 50 and make it 200. But yeah, so that's that. And I also wanted to showcase kind of the nuts and bolts of it here with, let me bring my screen down a little bit here. So Composer built a similar symphony to HedgeFundie's. So let's look at, I'm going to scroll down here, and I want to find the traditional HedgeFundie. Here it is. This is the traditional HedgeFundie strategy that I built here in Composer. I believe it's 55-45 is the standard UPRO TMF. So you can see right now 53.46 with a little bit of cash in it. So I'm going to click on it. And right now there's 2,088. It was launched on November 15th. And here we go. So I'm just going to scroll. And this is going to show the back testing for about a year. From a year, December 10th, 2020 to December 9th, 2021. And you can see the annualized return of that would have been 41.4%, max drawdown 15, Sharpe ratio 1.49. And then this is the if you will, the guts of the strategy that I mean, this is something I created in my head. This is a common knowledge, is a big thing on the Bogleheads Forum. But it's 55% UPRO, 45% TMF. You can see the text description. It's a quarterly rebalance. So that's mine here that I created using Composer software. Then they created a permutation on it that I'm also running $2,000 with. And that is up above here. So what they did is they took the well-known HedgeFundie strategy, and I'll read their text here. It says, a responsive adaptation of HedgeFundie's excellent adventure to weather the inevitable storms. The strategy uses drops in the S&P 500 to decide what to do. When the market is steady, it takes on risk by following HedgeFundie's excellent adventure to invest in leverage equity and bond funds. When the market is shaky, the strategy instead invests in safer assets like gold and short-term bonds. The symphony was developed by Composer. So again, this is one that they've developed that I'm running $2,000 with. What's interesting, I like to kind of compare and contrast. It looks like the initial HedgeFundie strategy outperformed this one over the past year, but it'll be fascinating to see over the next 5 years, 8 years, 10 years, how this strategy compares to traditional HedgeFundie. And so you can see how they build it. It says, if 10-day max drawdown of SPY is less than 5%, risk on, and then it's 55 UPRO, 45 TMF, else risk off, and they're going a blend of short-term treasury bonds, gold, TIPS, which are treasury inflation protected bonds, BSV short-term bonds. They have the kind of the 3 to 7 year from iShares, and then the BSV, the short-term bond fund from Vanguard. So this is the risk off. But again, back to what Dalio was talking about in his new book, the ability to do if this, then that. Again, so this is a strategy that's showcasing what Composer can do. If the 10-day max drawdown of SPY is less than 5, do this. If not, do this. And then you can play with these things. You can, as you're building them, you can say, oh, what if I took out the gold? Or what if I added in silver into this also? So you can kind of take these templates, excuse me, and run with them and tweak them. So yeah, so that's kind of what I wanted to show there. You know, the two different hedge fundies, the traditional one versus composers, and just to show the power. This one really kind of shows the power of composer, more the if this then that. The initial hedge fundy one is just kind of a quarterly rebalance, which you can probably do with like M1. But other brokers like M1 and others, you can't do this if this then that. Bridgewater Associates can do that. Renaissance Technologies can do that. DE Shaw can do that. Two Sigma can do that, and other type of really high level hedge funds. But the average person, unless they're a coder knowing Python, and even then, it's quite difficult. So, all right, so that's pretty much it for today. Just, we'll do a quick little portfolio check on my three main accounts. You see this one, which is Alpaca, which is running all the composer strategies, 151,758. Oh, we're up a little bit. Let me change that. 152,063. And here we are 629,359. And then in interactive, we are 426.80. So 1.2 and $2,000. And then, you know, I have the smaller accounts, which was about 40,000. So about 1,240, 1,250, 1,230 in that range. So yeah, just, you know, we've kind of been hanging out between that 1.2 to 1.3 range over the last few weeks. The market's been what a lot of traders would call choppy, volatile. It's been, you know, it's a big sell-off and then it's recovered. So it's kind of, you know, volatility on the path to nowhere right now. We'll see how that shakes out over the last few trading weeks of the year. But it's definitely been a great year for the Maneos compounding machine, especially being able to run significant capital now with Composer and Alpaca. So been getting some great comments. Very, you know, one guy commented last night, you know, there's no one like you on YouTube talking about the things you talk about. So really appreciate that. Again, I tried to make it a little different than other finance channels, which can give you kind of basic financial education, like Susie Orman or Dave Ramsey, or kind of channels that are more just financial education. I wanted to be more a portfolio share of a high net worth individual who's running significant amounts of capital, not necessarily Bridgewater or Rentec amounts of capital, or Goldman or Blackstone or any big institutions. And then the decisions I'm making, things that are working, things that are end up being mistakes, so that you can kind of like watch along and follow along, and then that maybe influences your investing. But again, with investing, the disclaimer here, there's lots of risk. Talk to a financial advisor. What I'm doing here may not be the best decision for you, but at least you can follow along and see decisions that I'm making. So with that said, guys, I will see you soon. Take care. Hope all is well.